Hello friends, thanks for joining me again. In front of you is the Nasdaq Daily chart. Thought we'd do some daily bar by bar price action. You can see on the chart that it's in generally an uptrend, and you can see that price accelerates higher and then goes through a period of consolidation. It accelerates higher, then there's a period of consolidation. This goes on and on. It's a regular thing in the market, and when the market is under a positive influence, that is like a buy the dips mentality, there's plenty of players waiting on the sidelines to buy a dip when it comes in, to get into a market that's trading in a nice uptrend. You can see over and over, price pushes higher, just like this. Then it goes through a period of consolidation. This one here was a much deeper consolidation. And people wait for these points to enter the market long. All markets have their own personality, and this one in particular threatens to break down on a regular basis. You can see price threatening to break down. This one actually did a little. It was a deeper pullback. And generally, these places are a good point to place your stops. People are entering here. There's an element of strength in the market. If you place your stop on that one, you would have got stopped out on this day for one single bar. But that's what happens in the market. Sometimes things happen slightly different than you expect. So we can see that prices pushed out of this consolidation zone here. It was a much deeper consolidation zone this time. So that might be some sort of warning that supply is being drawn out. But you can see that prices pushed out with a reasonable amount of vigour and pushed above the previous high. There's been another little threat to the market there, but nothing seems to have come of it, and prices pushed above its high. You might make note of that bar's low because people would have entered on that bar. And when price actually does break down like this, you need to be wary. Although the very next day price pushed higher and you can see that there was likely no serious damage done. But whenever price breaks below these more serious levels, you need to pay attention. Go ahead a bar. Now that's a test bar, testing the market for supply. Supply is a little bit below average, but nothing serious. And you can see that price remains above that bar's low. We go ahead another bar. We've got a secondary test. The price is still comfortably above that low. Volume's not excessive. So at this point, we're going to consider it a consolidation like this or like this. We'll go ahead another bar. Now, volume has increased on this bar. You can see price remains above the low of that bar. There would have been stops placed below the low of this bar. There would have been buying in that bar. And there's no obvious sign price is going to break down, or perhaps apart from these two bars where increased supply was drawn out, although it does appear at this point that the market recovered from that weakness, it absorbed that weakness. The longer it takes price to consolidate, the more concern you should have that the market's finding it difficult to absorb the supply. So a longer period generally signifies a little bit weaker market than a very fast recovery. And the depth of the pullback is also significant generally. The deeper the market pulls back, the weaker it is, and the more shallow the pullback to consolidate, the stronger it is. We'll go ahead another bar. Now you can see that price has gapped below this bar. So if you'd bought in here, or you'd bought as price broke out in here, then you would have likely had your stops around this level, and you should be out. You should have either already sold or sold as price broke below this level, unless you're in a longer term position. But on a daily chart or a smaller time frame than that, you likely should be out now and looking for a position. We go ahead another bar. Now there's buying on this bar. You can see by the position of the close, prices dipped lower, volumes increased considerably, and the high close suggested buying came in. That doesn't mean you should buy the market. You just make note that buying came in. Now, if you're looking for a position, you should be looking for a short position at this line. If you saw weakness come in, if you saw price come up to this line and then look like it was about to fail in here, then you would sell short into the market as price rejected recovering that line. That's your short entry. Long entry, you need to wait. There's no long entry there at the moment. It's an up bar. Volume is a little reduced, but that's more than likely because price came back and tested the market for supply initially, and then it found supply was low, so it pushed up to close where it did. But you're looking for shorts at this level. Apart from that, you're just watching, unless you're on very small time frames. But on this time frame, the daily chart, or a 4-hour chart or something like that, you would be looking for a short entry or watching the market for signs of accumulation and then a breakout. Go ahead another bar. Our price is pushed lower. It's testing the lows of this bar, and probably where support was found over here on increased volume. So the market's come back. We're seeing how strong this level is, and knowing that anyone who bought in here may still have their stops in this sort of area below these lows. So the market's testing the strength of the market and perhaps even searching for some stops. Go ahead another bar. And that's an absorption bar. So you've had buying come in here, confirmed here. You've got a pullback to test these lows. And this is an absorption bar, effectively. So you've got buying come in. At this point, you would only buy the market as it pushed through here. You could take a position at these lows, there's no doubt. But you leave yourself vulnerable if the market wants to continue testing lower, and you don't know how long this accumulation stage will go for. So unless you're trading intraday on a small time frame, you'd be better off waiting for price to show that the accumulation is over, if it even is taking place, and buying the breakout. On a very small time frame, on a 5-minute chart or a 10 or 15-minute chart, you could buy these lows and trade it as a day trader. But on this time frame, you are taking a increased risk buying at these lows at the moment. We'll go ahead another bar. Prices moved up to the top of the range. We're calling the top of the range here. On this time frame, you're only looking for shorts up here. So there's no short entry. At the moment, you've just got some initial accumulation happening and no long entry. A long entry would come at this point as price broke through this level. Move ahead another bar. You've got a little down bar. It's a no supply bar, although average volume. It's just part of this accumulation. There's no serious, it's not a seriously interesting bar. Now, prices move down now, and it's closed below the low of this bar, which is significant. Volume wasn't particularly high, so at this point you really haven't seen or any serious amount of the buying that took place here. It hasn't been dumped. It likely remains held. If that volume was much higher, then you might be concerned that any buying in here has been sold, and that would probably mean the market is going to go much lower. But that hasn't happened at this point. We'll go ahead another bar. The significant thing here was that price has closed below all of these lows, and in particular this bar where the lows were tested previously. The price has broken down further. Here was the interesting level. The close off the lows suggests that there was some buying. Now, volume has increased reasonably, so there may have been some buying in here dumped by anyone who was a bit nervous or concerned, but it's not really high. So I would say you can only estimate these things, but a reasonable amount of the buying in there remains held. You've got buying come in the market there for sure. The market's tested below the low of the previous bar, and it hasn't continued lower. So it's had the opportunity to continue lower, but the market was buying in here, and this is likely some form of shakeout here taking place. So this was buying on this bar for sure. An aggressive trader on a shorter time frame would probably buy the break above the high of that bar, or the close of that bar. Take your pick. If you're on this time frame, you're really still looking at this and just watching an accumulation take place. Now price is threatening to move lower again. You can see that it's respected the lows of that bar. So there's the opportunity now to break down and continue lower. So there was no entry for the aggressive buyers here. You can see that here's where price initially found support. Volumes are suggesting that the buying that took place over here mostly remains held. And this is a very threatening bar that's taken place on pretty decent volume. So if price continued lower here, you could consider selling the market and going short. It seems like any chance of the market moving back up to this level and failing is now gone. So you wouldn't consider that anymore. In fact, you'd probably buy a breakout through here. We'll see what happens next. And prices gapped higher. in a quite aggressive manner. This is a large gap, and that would have taken place deliberately, just like back here. This gap was likely deliberate, and that was also a telltale sign that there was going to be an intentional pullback of some sort. You can see over here, here's another gap where the market has rammed lower with some sort of real intensity. And prices back to the lows where the initial or preliminary support came in. This is likely a buy the offer bar. Whatever was stacked in the offer, the market has bought from the previous close to the lows of the traded range in one fell swoop. They've absorbed and bought all of that, and then prices traded in that range, you can see. So that was likely a fairly bullish sign that the market isn't going to continue lower, even though it threatened to do so on the previous bar. That's more a sign that the market would like to accumulate and go higher. But if you're going long on this time frame, you're still waiting for an entry point. We'll go ahead another bar. And that's likely an absorption bar. Now, it could be telling you the market is going to retest these lows. There's likely some small resistance from anyone who was locked in here and was a little concerned, and they're saying, if price comes back to my level, I'm going to sell out for break even. These are likely your nervous Nellies who aren't reading the chart and understanding that this is looking more and more like a shakeout now. But there's always going to be some resistance as you go through these obvious levels, and this is your resistance being shown here right now. We'll go ahead another bar. Our price gapped above. You see how the market uses these gaps to benefit themselves? This was the line that was interesting, or that line, depending which one you like, but there's no doubt at this level the market was having some difficulties getting past these lines and had to absorb some of the sellers that were there. So in response, price gaps up into this area. And the intention is that anyone who was going to sell is now in profit, or may well be in profit, and they may choose to hold now rather than sell for break even. We'll go ahead another bar. Now this bar here, this bar's gapped lower. Its range is really looks more like this. You see it better like that. The aggressive buyers are in. I don't know where they would put their stops. It's a long way down here to put a stop. If you were to put a stop down here, it's a very expensive stop. I guess that they're drifting in no man's land, sort of, at this sort of level, but that's going to be easily taken out. It's not really a good position. Anyway, that's a test for supply. You can see that volume was lower than the previous 3 bars. So supply wasn't a serious issue. And you can see in response, prices moved higher. Volume's still not very strong, so it's unlikely price will break out. You may find at some point that price tests this position again. We'll go ahead again. Now this is telling you that price may well come back and test this level, come back like this. We'll see. So we'll go ahead another bar. And you can see that price has made some attempt to move lower down to here, but it's rejected that and instead continued higher. So now you may consider this is actually an absorption bar. Volume was fairly reasonable, up around average. So you just have to wait and see what's going to happen there. Price may well continue higher. If so, this level here is where I'd be looking to buy the market on a breakout. As price pushed through there, especially if the market was doing so on increased volume, then I'd be looking to buy that market and consider this buying, this a shakeout, this some consolidation that went like this, and then if price continues and pushes out, I'd be considering buying that market. We'll go ahead, and instead price has gapped lower, and now it really is testing the strength of this line here. It's because there was a little bit of difficulty here. Markets generally do this sort of thing. It's really common. Price pushes out and then comes back and tests the strength of the market. And that gets rid of any nervous Nellies in the market who are only going to sell into a rally anyway, and that's going to cause the professional side of the market to have to absorb their supply at a higher price. So it's better off removing them now if possible. We'll go ahead another bar. You can see the price has now found a little support right at the line we're interested in. The very high volume is likely contract turnover, in fact almost certainly, so you wouldn't consider that a serious problem. If anything, you can look how high contract rollover was here, and this was a little lower. So in general, you might say that there was lower volume here overall, but it's hard to estimate. Go ahead another bar. Price is pushed higher again. I'll actually be looking at this level as an interesting level to watch too now. You've got one here that I've been mentioning before, but this is developing into a level where if the market pushes through there on an increase in volume, you could consider buying this level if you wanted to get a little bit closer to the range. That way you could put a stop. It's still going to be reasonably expensive, but a stop down here. We'll go ahead again. And that's really an absorption bar. It's the market tried to go a little higher initially. It wasn't supported by the market, so in response it's pulled back. It's closed within the range of this bar, no worries, so it's not too much of a concern. We'll go ahead again. Price is coming back again. It's a secondary test more than likely of this interesting level. So you've effectively had price push out, come back and test, push out a second time, come back and secondary test. We'll go ahead again. Now, remembering right there, the market can threaten to go lower here, and it's threatened to go lower here. It's a regular thing in this stock, threatening to go lower, teasing the market participants, whether it really is going to go lower or not. It's the personality of this market. It threatens to go lower, and sometimes it threatens to go lower, and it does, but most of the time it threatens to go lower and it doesn't. Okay, we go ahead a bar. You see the market's found support. This time it didn't respond immediately, but there's no doubt it's found support, or at least attempted to, just like this, where prices dipped below the previous low and then recovered. this doesn't look like a market that's going to break down, because when it moved down to here, it had the opportunity to do so, and it didn't take that opportunity. Instead, it's closed back at the highs of the bar. So although it could still happen, anything can happen in the market, it's less likely to do so. Now you can see prices pushed away. I'd be looking at this level for a possible entry as price pushed through here. This is the clear entry level. Once price moves above this, it's gotten above all the weakness that was generated in here and in here. This is all absorption. And some would say it's an inverse head and shoulders. However, that's how these things form. We'll go ahead another bar. Anyway, that was a buying bar. The market has bought the offer. There's a beautiful little test. Pulls back and then closes back up its high. And the low volume down here suggests that there's very little selling in the market at that point. So in here, or at this close, in here, here's your new buying level. As price pushes through here on an increase in volume, you'd certainly buy that. If you want it to be safer, you'd buy at this level. We'll go ahead. Now you've got another secondary test. Here was your initial test. This is just the market not being ready at the time. So it's had to mark time on the spot, if you like. You can see that price is easily within the range of this bar. There's no danger, there's no obvious danger. It's a secondary test. Spread is narrowed further, volume has reduced further. It's almost like confirmation that selling pressure is low. And just looking at that, you can also see that the market has formed a little oblique line like that. So if you were a bit more aggressive, you could buy the breakout through that line. Barring that, here's your other levels. They remain the same. Depends how you want to play it. And most people would have a trading plan, and a trading plan will tell you where your entry should be coming from. But there's no doubt that makes good sense too. Especially as we can see that the opportunity's been there for the market to break down. It hasn't done so. It's more than likely going to move higher at some point. So buying somewhere down here means you don't have to have such a wide stop. So buying closer to the danger point, as long as you've got justification to do so, is a good idea. We'll go forward. The price is pushed higher. So if you had bought like that, you would be in the market. You can see that there's been a nice increase in volume. It's a bit like a breakout volume. If you were to buy this line, the market's pushed up, teased, and then closed just below it in the relative safety of the shadow of this line, just below it. And here's your other level. So you can choose how you want to take the entry. This more aggressive entry will fail more times, but you'll get bigger profits. You've got intermediate here, and you've got a breakthrough here as an entry. Would be successful more times, but the profit would be slightly less. Everyone's got their own risk profile, and you can design your trading plans to reflect that risk profile. Price is gapped up. Spread isn't as narrow as it appears because the true range is actually like that. That's what that bar really looks like. Now volume was actually reduced, and you can see that the gap's taken place right where that interesting line was. and it's pushed up. It's teasing at this level now. So the levels I've been mentioning are being respected by the market. You had this oblique line, it gave you a more aggressive entry. Price then moved up and closed right at this level, and then price gapped up and it's closed pretty much at this level. We'll go ahead one bar. Price is gapped higher again. See, these gaps are intentional to make the sentiment in the market do what the professionals would like them to do, which is at this point hold and not sell. If they're trying to push the stock out, they don't want to have to buy people who are selling for small profits. So they're gapping it out over the important levels, which we can see, to get the market out. Now, you should be in the market here somewhere or other, whether you got in on this bar as price broke this oblique line, whether you bought this bar as price accelerated through this level, or whether you bought this bar as price pushed through this line or gapped above it. One way or the other, you should be in the market now, long. That's an absorption bar. It's a bit of a push higher that wasn't supported by the market, and then a little bit of a test for the rest of the day. It's certainly not dangerous. It's right up in the highs of the bar. If price consolidates right up high here, that's quite bullish. If price has to pull all the way back to the previous highs, that's far weaker. So a shallow consolidation up at this high is quite bullish, really, even though at that point the market wasn't willing to support higher prices. You have to remember, it's gapped higher in 3 days, quite a way. It needs a little period of consolidation to shake out any short-term profit takers. We'll go ahead another bar. That's another absorption bar. There's a little test in the bottom. Little test below the previous close. And there's obviously not much selling pressure in the market. So it's just popped up a little bit. There's no supported push higher, but the response to the lack of supply during the day was for the price to push up and close just a fraction higher. Now price is gapped up, so you can actually see that the consolidation period was done quite high. Here was the consolidation. So that bar looks like that. So you can see that that consolidation was done very high in the range of that bar, which is quite a bullish sign, and price is gapped out again. So the intention is for the market to hold. If that was on really high volume, a gap out like that with a narrow spread would be a concern, but because it would signify potential supply issues, selling. But that little bar on modest volume with strength now in the background. Hope you've watched my video on the background. You've got strength in the background. This was buying, this was a shakeout and buying, and this was the consolidation and mopping up any supply. And you've had price just break out. So it's unlikely that any professionals will be doing any serious selling. We'll go ahead another bar and have a look. Now, in the bottom of that bar, below the previous close, was testing the market for supply, and the low volume down here below average suggests that there was very little supply and it was hard to hold the market back, and in response it's closed higher. So that's a little bit of consolidation in the bottom, and then a bit of enthusiasm by the market, who can now see what's going on. We've clearly broken above this whole accumulation and consolidation zone. This is a clear breakout, And the rest of the market is getting enthusiastic now. That's a nice little test, although the shape of the test is beautiful, but volume was a little higher, so there was a little bit of selling pressure come in there. It's not excessive, but it would be worth noting. Now, on the upside, this is a level to watch. If the market was to come back, if it came back and tested that level, that would still leave it in a good position to push higher. If it broke much below that level and then showed that it wasn't able to recover, then you would have to worry whether the market is going to head lower, and you could actually look for a short position below that. We'll go ahead another bar. Prices gapped higher again. It's only a little gap, but it's a gap all the same. That's trying to encourage the market to hold on as price pushes higher. Here was the previous level. So that was a 1 bar consolidation. There still is a little bit of concern that some supply was drawn out. I actually expected there might be a secondary test at that point, but the market's pushed up. That little bit of supply might have corresponded with the previous highs. That's why that little bit of extra supply came in. We'll go ahead another bar. And prices pushed back. This is an important level to watch. This is an important level to watch. And here's the previous highs. So prices coming back, it's testing the previous highs. It may come back to here, or it may find support here and put in a bar sort of like this, because if this market does that, it may put in something like that. Let's have to see the next bar. Oh, that is the last bar. So that was, what's today? Thursday. So that was Wednesday night in the US. So we'll just have to see what the market does tonight. There's 2 more days of trading. It could come all the way back to this level. Here was the next level. Here was the previous highs. A little bit of extra supply did come out here. Not much, but a little. The market may just want to test that and see just how strong it is. We'll just have to wait and see. Hopefully you were able to follow that through. If you're still with me now, you're to be congratulated for lasting this long. It can be a little boring at times, but hopefully you're learning something. I'll leave it now. We'll close up. Thanks for your time. See ya.